Now I'm going to read some words from Tom Lee, who got it right. They were about tech stocks and how the economy was expected to keep going strong even though the markets were uncertain. It's been a great week for the stock market, the crypto market, and everything else. So he's going to share some more really important ideas and what's most likely to happen next. I have to say that his research is really great, and I think a lot of you here today will find it very useful. We're going to go into a lot of detail about it to make sure you understand how Tom Lee and I are taking advantage of it and what a lot of other people are doing right now to make sure everyone is okay. Before you watch, please read the advice and click like so everyone can see it. Now let's hear what Tom Lee has to say, but first, Tom Lee, what did you see that other people don't? I thought we were going to zero plus. Brian, zero is always a possibility, but I think it comes down to three things. Firstly, the high yield market never backed up the worries that experts had about the economy. Spreads on high yield bonds did get wider, reaching about 439 basis points during the slump. On the other hand, they'd go up to about 700 and then drop back to around 360. Secondly, you're right that the stock market did have a liquidation event, but all waterfall dropped 17 of 18. Since 1950, there has been a V-shaped recovery. We knew the bottom would be shaped like a V when it was set, and it was only really different in 2022 because of Jackson Hole. Third, we had a lot of faith in companies. You should know that these companies have been through a lot. They made it through a flu shutdown, a recovery that had a whip effect, and the fastest rate hikes ever. I mean, I think businesses should really be praised because they've shown earnings and estimates that are much better than we thought they would be, even for the first quarter. That's why we told our clients to sort of buckle down and get more publicity. In a tweet around that time, I told them, you won't really lose money until you sell. This is something I don't normally do. I really meant what I said, Tom. I was talking about a show on another network that said seniors are leaving. Someone took my angry tweet or post and made it live. But my point was that in the fashion world, you shouldn't try to time the market. Unless you're leaving in a few months or your ads or something, it's better to be in the market for a long time. That's one thing if you're a trader or hedge fund, but if you're an investor with a horizon of more than 5 years, it's clear that the trend is up. There were a lot of things going on. You brought it up during the tariff disruption, but we already knew that more than 60% of skilled stock investors lean Democratic, so they had a half full picture of what the White House was doing. That's why the move in stocks was bigger than the move in bonds, which is the opposite of what happens in the fixed income world, where 60% of people who handle bonds are registered Republicans. So that's why I think what the bond market did gives you a better warning, at least in this case. The second is the 10 best days, which has been talked about a lot. And we pointed out several times that the S&P only returned 3% a year in 2023. People also sold a lot of shares when the price was $48.15, but now they're buying them back. That means they missed a gain of 1,000 points or 20% by 2025. Have you thought about what kind of bonds would pay the most at these prices? To follow up on what we were talking about, what do you say to those who missed it and wish they had piled in at the lows a month ago that no one wants to go? Okay, now that stocks are back at all-time highs, I'm going to make my move. Then we might go down again. So here's some general tips. I have some advice for you. For you, the 10-year return is 4% right now. I don't think it's a big problem for businesses or the government, which is why I think it's an amount of money that businesses can make a profit on. There's a lot to be happy about. In 2026, we'll have less control because the trade mess will be over. If we get tax cuts, we might be able to trade more freely with other countries, which would be good for U.S. business profits. The market has been flat since May, so no one should feel like they missed anything. They might be able to buy a lot of businesses. I think a lot of stocks went down in value, but I still see opportunities and names that have been written off. We talk to our clients about this, whether it's the Mag 7 or Tesla. Yes, there are still a lot of chances in small caps. Tom Lee made some great points, and the way he talked about them really hit home for me. Since most price changes in the stock market and cryptocurrency market happen within 20 days, you might miss out on some great opportunities. For that reason, I think it's important to hold on to XRP, cryptocurrency, for a long time, especially now. That being said, it's clear that the U.S. economy is getting stronger right now. The crypto market is doing really well, and there are a lot of stocks out there. We can see that Donald Trump is putting more pressure on Jerome Powell because he won't cut interest rates because he says it's not fair to the U.S. Trump seems to be making his point. You can see that China and Europe are doing it. What's taking so long, Jerome? Why are you still here? There are a lot of different opinions on why that is, but I'd like to know what you guys think in the comments. In the end, I think we can all agree that rates need to go down. The stock market is doing well, and we're ready for a great gathering and the bull market to begin here. Because Trump says the stock market will go even higher, which I find very interesting, even though it has already gone up a lot. There's something very strange going on here from Koshi. Forecast markets, as we can see. Since the U.S.-China trade deal, prediction markets now only expect 2 interest rate cuts in 2025 instead of the 3 that were expected before. This is strange. I'm not sure why the prediction markets have changed their minds, but I think that Jerome Powell's words have a lot to do with it. He's been saying that he's not in a hurry to cut rates in recent talks at the Fed list and other places for about 3 or 4 months now. With that in mind, it's already 5 months into the year, and we only have about 7.5 months left. How long does he really have to lower rates before we get the number that many people were expecting before, which was 5 rate cuts? Back to back, 2 or 3 months in a row? I think that's crazy. Also, what's going on between the U.S. and China is very interesting. For example, Trump has changed his mind about China a lot from fuck China. We're not going to do business with China. Instead, we're going to do business with India, which is great. We're also letting trade and everything else happen, which is also great. Things are changing a lot here. I'd like to play this short clip we just got so you can hear how Trump talks.